Adam, welcome. And if you'd like to start, please do go ahead.
Thank you very much, Lale, and thank you everyone for being here tonight, and again echoing Lale's Happy New Year's to everyone. Lale asked me to kind of begin by just maybe setting out a little bit my own kind of research trajectory and where I have how I got to write this book, if you like. Those of you who know my work know that I've written initially quite a lot on Palestine and political economy of Palestine, working in Palestine for a number of years. And from there, completing a PhD on the Gulf Arab states, the Gulf Cooperation Council in particular, at York University. And the reason for that that jump, if you like, was I think a feeling that the Gulf, is a critical part of understanding the wider region, and that we need to think about the Middle East in that sense of a regional scale, and becoming very interested in the way that the Gulf's political economy and capitalism in the Gulf affects the development of other states in the region, particularly from the early 2000s onwards. So my initial research kind of focused around these questions of capitalism in the Gulf, the nature of the kind of business conglomerates and relationship with the state, and the ways in which Gulf capital has kind of inserted itself into the wider regional political economy and shaped, if you like, state and class formation in the wider region. So that's some of my initial work, and from there, about 5 or 6 years ago, obviously this work on the Gulf really raises the question of oil and the centrality of oil to both the Gulf states, the wider Middle East, but also more globally. And I've always tried to kind of situate the Gulf in the kind of wider global political economy. So this is, if you like, where this book comes from. And maybe from there, I'll start sharing my screen and move into the discussion of the book itself. So. Okay. Uh, so as I said, this book is in many ways a continuation of my earlier work around the Gulf states, but it is really in some ways a different kind of book, because I try to write through this book a global history of oil, to try to understand the ways that oil, as the world's leading fossil fuel, was very much connected to the making of the world market, and also to the ways in which the oil industry globally operates today. So the Middle East is clearly a big part of that, but it's a much bigger story than just the Middle East. So I wanted to begin by just outlining some of the theoretical interests or concerns of the book, and then moving more in depth to some of the key themes. So the if you like, the impetus for the book is a dissatisfaction with a lot of the ways in which oil is generally talked about. I'm sure many people in this room will know some of the classic histories, Daniel Jurgens' The Prize, for example, or Anthony Sampson's The Seven Sisters. There's been a lot written on oil over the years, and I felt that this story of oil is often told with a kind of a commodity determinism, in the sense that oil itself is invested with this kind of innate power, as if just as a substance, it has this magical ability to shape societies, to shape the world, and it's often spoken about separate from capitalism and capitalist social relations. So the aim of the book was to try to situate oil as a fossil fuel within these wider social relations, and ask what it is about capitalism that, if you like, gives oil this apparent power. to begin with this critique of commodity determinism, or to use Marx's framework, a critique of commodity fetishism. So this I'm not the first to try to make this critique. Others have done so. Michael Watts's work, for example, Hannah Appel's work on this, Matt Huber's work on the U.S. oil industry and U.S. petrochemicals makes a similar kind of critique. And of course, Andreas Malm's fantastic book, Fossil Capital. But what I tried to do with this book was to start with this critique, and from this tell the story of 20th century and 21st century capitalism, and the ways in which oil was really so integrated into the making of the world market over the last 100 years or so. So when we think about what it is about capitalism that gives oil its apparent power, I'm speaking here about things like the tendency towards endless accumulation, the speeding up and ever increasing speeding up of turnover of capitalism, mechanization, all of these features of our social system, which we live today, and we often don't kind of think about explicitly, but which really bring to light or have given oil as this the leading fossil fuel. So, as I said, I connect this to the history of the world market, in particular the rise of the United States, but also other key sites of oil production, and I'll show in the next slide kind of the chapters so you get an idea of this. The other thing I tried to do in this book is to move away from a tendency to think about oil only in its upstream form. In other words, only as underground oil supplies, crude oil supplies, and to think about actually what oil becomes as it circulates in our lives, as it circulates through the economy. So thinking about the products that oil is made into after it's refined. A big part of that, obviously, is transport fuel, liquid transport fuels. But there's a big emphasis in the book on the question of petrochemicals, plastics, and so forth, which I'm going to speak about a bit more in a second. The questions of food and agricultural systems, and also financial markets, particularly from the mid-20th century onwards, and the supremacy of the US dollar as the global currency. So to think about the way the oil, as it's transformed, as it's refined, as it circulates, is really indelibly bound up with all of these aspects of our social life. And then the final kind of theme of the book is to try to unpack the ways that oil companies have operated, in particular the emphasis on vertical integration, which again I'm going to come to in a second, but also the ways in which new parts of the global oil industry, in particular the Gulf and the Gulf national oil companies, are really shifting and changing the way that the global industry operates today. And again, I want to come back to that in a second. So just to give you an idea of the chapter outline and how these kinds of things fit together. So there's 13 chapters in the book. The first chapter kind of gives this theoretical account. Then I begin with looking at the early years of the American oil industry, in particular Standard Oil, the big American company that is the origin of so many of the large American Western firms today, like Chevron and so forth, ExxonMobil. I then turn to the Middle East and the big European or Western American and European companies, the Seven Sisters as they're called, the big seven Western companies that dominated world oil for most of the 20th century. There is an emphasis also in chapter 4 and also later on in chapter 10 about trying to understand Russia and the Soviet Union and the place of Russian oil in this picture of the world. And I won't go through all the chapters, but you can see some of the themes that are covered in the book, all the way up to the longest chapter, which is the last chapter, which discusses the contemporary climate emergency and the ways that the oil industry is really embedded in the question of blocking any effective response to the climate emergency. And again, I want to come back to that at the end. So with that, I wanted just today to pick out three themes, if you like, of the book, of those 13 chapters, and speak a little bit more in depth about them. So the first one is this question of petrochemicals, which I devote a lot of attention in the book to. Now, what I mean by this is a major shift that took place in about the middle of the 20th century, in which a lot of natural products, things like glass and natural rubber and natural fertilizers, paper, wood, and so forth, become surpassed or replaced by these range of products that are derived from oil and natural gas, in particular from oil, these petrochemical products. The most evident example of this is plastics. But we're also talking here about things like nylon and various other synthetic fibers, synthetic fertilizers, synthetic rubber. These synthetic products that developed around the middle of the 20th century, particularly associated with World War II, and really came to dominate our lives. And whenever I'm giving a presentation on this, I always ask the listeners just to kind of think about where they're sitting in the world, in their room today, and look around and think about how much of what surrounds us, whether it be the paints, whether it be our laptops, whether it be all of the plastics, and very importantly, the clothes actually that we're wearing, which are most certainly derived from synthetic fibers. These products are products of oil. And we tend not to see this. We tend only to think about oil in its form as a liquid transport fuel and forget about the ways that it is actually bound up in our daily lives in such a deep way. So one of the real arguments I try to make in the book is that we need to see oil in our daily lives, in particular in this form of petrochemicals and plastics and so forth, because that transformation did, the emergence of these kinds of synthetic products, is it made oil in many ways invisible. We only tend to think about it in our general lives in this form of a liquid transport fuel, and not in the way that it's so bound up in how we live. So I think a very interesting example of this is the question of fast fashion. The fact that if we think about the way the fashion industry is organized today, in about the 1990s and 2000s, there's the emergence of this very rapid turnover of seasons and different fashion styles, micro seasons, they call it in the fashion industry, which in part was dependent upon highly exploited labor in places like Bangladesh and elsewhere, but also was very much associated with synthetic fibers, with this the ways in which petroleum, oil, came to enable a massive expansion in types and styles of clothing that would not have been possible elsewise, otherwise. And that's we're living clearly with the consequences of this in terms of waste and other kinds of toxic questions. So this shift or this emergence of petrochemicals was a big part of the coal to oil transition that took place in the middle of the 20th century, in which oil emerged as the principal fossil fuel, and through its ability to underlie these synthetic products, it came to permeate all of our lives, and it was very much associated at this point in the middle of the 20th century with the rise of the United States as the dominant global power in the post-war period. And there's a very interesting story which I tell in the book about how the United States basically took on through World War II and in the immediate aftermath of World War II, Germany's petrochemical industry, which at that stage, prior to the war, was the dominant global petrochemical industry, appropriated many of the kinds of technological secrets of the German industry, and shifted the substrate of synthetic materials away from coal, which it was the case in Germany, towards oil, which was the innovation, if you like, of the American oil industry. So there's a kind of very strong correlation between this transition to a synthetic world and the rise of oil as the dominant fossil fuel in so many ways. This is important today, not simply because of the questions of microplastics and the toxic kinds of chemicals that we live with, and that we see articles about this every single day. But I really do think one of the other arguments I try to make in the book is that we need to reframe this question of plastics and petrochemicals as one of fossil fuels, not simply a question of recycling or microplastics, but actually a really fundamental part of dealing with climate change and the climate emergency. So that's one side. I'll come back a little bit to petrochemicals in this next section too, where I want to turn to some of the geographical dimensions of the book, and in particular the rise of what are called the NOCs, or the national oil companies, which I'm sure, again, this being a primarily Middle East studies audience, everyone here is, I think, perhaps familiar with this term. In particular, the rise of OPEC and the OPEC states after 1960 through the 1970s. But really, one of the things I try to unpack in more detail in the book is the ways in which there has been a fundamental shift in how the world oil industry is organized in the last 10 to 20 years, associated with the rise of China as a major center of capital accumulation and, of course, global manufacturing. And one of the things I explore is the ways in which the national oil companies in the Gulf, in particular companies like Saudi Aramco, need to be seen as much more than simply producers of crude oil, but themselves have undergone a vertical integration, a downstream diversification in the manner of the Western oil firms of the early 20th century. This is not to say, of course, that the big Western companies are not important. Companies like ExxonMobil, Shell, BP remain absolutely central, but the focus of their activities, the basis of their extraction and also much of their sales tend to be concentrated in North America and Western Europe, whereas what we can see in the last 2 decades is the emergence of what I've called an East-East hydrocarbon axis, linking the Gulf states in the Middle East with China and East Asia. And that's what I want to speak a little bit about in this next section. So if we think about how oil consumption has changed in the last 20 or so years, we can see there the one very dramatic fact is a shift in the way that of where the major consumption of oil takes place, and also associated with this a shift in the direction of the crude oil trade. So this table here indicates the world's share of crude oil imports. And we can see in the year 2000, about 50% of the world's oil trade went to the US and Western Europe. That in the last 20 years has dramatically shifted. Now, China takes around 20%, about a fifth of the world's oil imports. And this is associated with a big increase in the consumption of oil in China, as, connected, of course, to its emergence as a center of world manufacturing and as what's been called the factory of the world. So China is itself a major oil producer. It ranks in 2000, it ranked about fifth or sixth in the world in terms of oil production. But its own oil domestic reserves are not enough to meet its demands, and it has instead been met through imports. And the majority of these imports come from the Middle East, primarily from the Gulf states, the Gulf Arab states, Saudi Arabia and elsewhere. So we see at the level of crude exports globally, a shift away from the Gulf's exports going primarily to Western Europe, eastward now to China and wider East Asia. This is also, it's not simply a Chinese phenomena. We're also talking here about Japan, which has been a major importer of Gulf oil for a long time, but also South Korea and other East Asian states. So this is a very important shift, this kind of directional shift away from Western oil exports from the Gulf towards the East. Now, associated with this, and again, coming to the point that I was making earlier about thinking about oil not simply as a crude substance, as a crude oil, but also thinking about what it becomes as it's transformed, is a shift in the nature of global refining as well. So crude oil is basically useless until it's turned into something useful, whether that be a liquid fuel, transport fuels, diesel fuel, and so forth, or petrochemicals and further downstream diversification. If we look at world refining capacity, this I think is a really striking example of what's happened in the last 20 or so years, is associated with, again, the rise of China and East Asia, a change in where refining capacity is located. So in the early 2000s, again, North America and Western Europe were the clear centers of refining capacity. And over the last 20 years, we've seen China and East Asia emerge now with more than a quarter of the world's refining capacity. And the only other place in the world where there's been an increase in refining capacity is the Middle East, again, primarily the Gulf states. So there, again, what we see here is that crude oil is either exported in its crude form to China, East Asia, or it's refined in the Gulf and sent as liquid fuel, again, eastward, or it's sent as crude form and refined in China and East Asia once it arrives at its destination. So refining capacity is another, I think, very clear indication of how the world industry has changed in the last 20 years. And in fact, if we look at the Gulf states as a whole, they now rank third in the world behind the United States and China, or China and the United States in that order, in terms of total refining capacity globally, more than any other European state. So it's quite a significant shift. So what we see as part of this is the downstream diversification of these Gulf national oil companies. So these Gulf firms, companies like Saudi Aramco, the Abu Dhabi National Oil Company, ADNOC, and many others in the Gulf, are no longer simply extracting and exporting crude oil. They're also intimately involved in the refining of that crude oil and further downstream activities, including petrochemical production. This is a really important phenomenon, I think, to take note of, because it is quite clear in the language of the oil industry that petrochemicals, plastics, are seen as being, to quote, the future of oil. So the predicted demand for oil is expected to come mostly from these refined petrochemical products, as the demand for liquid fuels decline, associated with electrical vehicles and other things. So petrochemicals are really highlighted as the kind of the future of oil, and are being promoted very heavily as a key priority of the Gulf national oil companies. Saudi Aramco, for example, aims to have by 2035 about 40% of its oil going towards petrochemical production. So what we see here is that these oil companies are vertically integrating. They're becoming active at all stages of the oil value chain, not simply the extraction of crude oil. Very clear indication of this took place in 2020 when Aramco, the biggest oil company in the world by far, Saudi Aramco, last year, Saudi Aramco's profits exceeded the combined profits of ExxonMobil, Shell, BP, Chevron, and Total Energies, those five large Western companies, the five biggest Western oil companies. If you add up their profits in 2023, their combined profits were less than the profits of Aramco as a standalone company. Now, what Aramco has done in 2020, it bought up SABIC. Again, I'm sure this company is familiar with many of the people here today. The Saudi Arabia Basic Industries Company, which is ranked as the third biggest petrochemical firm in the world. It is now a subsidiary of Aramco, and it's through this acquisition that Aramco has undergone this kind of downstream diversification into the production of chemicals and petrochemicals. The other thing that Aramco is doing, often in conjunction with Chinese national oil companies, is moving into this new technology, which is crude oil to chemicals, which is basically the direct conversion of crude oil into chemical products. It's a new kind of technology that's being developed. It kind of cuts out one of the steps in petrochemical production. And there's a big plant that's currently under development in Saudi Arabia that's supposed to come online this year in 2025, which will be the largest of these crude oil to chemical companies in the world, and really dramatically shift the way that the world's production of petrochemicals takes place, I think. So this downstream diversification is not simply in terms of refining and petrochemicals. It also involves the shipping of oil. Some of the largest tanker fleets now are owned, as Lale knows, by Saudi companies. Also, Qatar Energy recently has put an order in for a large fleet of tankers, liquefied natural gas tankers, as does ADNOC, the Abu Dhabi National Oil Company. So these firms are active at all parts of the oil industry, not simply the question of crude oil, including retail, by the way, including also service stations and petrol stations. So Again, this is not meant to say that the big Western firms that we're very familiar with are no longer important. They're crucially important, but there's been, if you like, a fragmentation of the industry between, on one side, centering around North America, where those big Western firms tend to be predominant, and this East-East hydrocarbon axis. So moving along, just again, the question of plastics. The polymers of ethylene, described often as the world's most important chemical. We can see in terms of imports, China is by far the biggest importer of ethylene polymers. These go into everything that is around us, all the plastic products that we consume, that get manufactured and then get exported further afield. So again, we can see from this table that about a quarter, way more than anywhere else in the world, of China's imports of these polymers come from the Gulf states. So again, it's not just crude oil; it's also the export of refined petrochemical products. Same is true in India. And we can also see propylene, polymers of propylene, a similar kind of trend where the bulk of global imports or global exports of these products are coming from the Gulf region. Now, the other thing that's very interesting, I think, to think about in terms of this geographical repivoting of the industry is the ways in which the Gulf investments from these national oil companies are also becoming embedded within Chinese productive circuits and again wider East Asia. So here you can see listed under China Rongsheng, Hengli, Shandong, Yulong. These are basically the biggest privately owned petrochemical firms in China. And, you know, we often don't realize this, but actually a large proportion of China's petrochemical production is actually privately produced, about 30%. So these are the biggest of these firms in China, privately owned. They are among the biggest in the world as well. So Rongsheng is like the 7th biggest petrochemical company in the world. These are very, very significant firms. And what is interesting about this is that each of these firms, and there are others that I haven't included here, are now jointly owned with Gulf investors. Saudi Aramco in particular is the standout actor in this. So Rongsheng, for example, is 10% owned by Saudi Aramco. So this is not just through Saudi Aramco ensuring supplies for its crude oil, but it's actually involved now in the direct production of these petrochemical products within China. And there's many examples. These are kinds of trends that have happened in the last 3 or 4 years. Some of these deals are kind of working through as we speak. Similarly, very interestingly, South Korea, S-Oil, which is the 3rd largest refining company in South Korea, and is currently building a huge petrochemical complex, which will be by far the biggest one in South Korea, is not fully owned, it's a subsidiary of Saudi Aramco, majority owned by Saudi Aramco. So again, when we think of these firms that, we think of them as being South Korean, they're actually, in this context, Gulf controlled. Hyundai Oil Bank, another major oil refiner in South Korea that is connected to the Hyundai conglomerate, again, is closely has ownership of Gulf investors. In Malaysia, the biggest petrochemical complex currently under development in Malaysia is a 50-50 joint venture, again with Gulf Capital. In Japan, there are also examples of major refiners that are. So we see through these patterns that this East-East hydrocarbon circuit means that the Gulf is actually embedded within these production circuits within China and East Asia. So this closer imbrication of these two regions very much associated with this changing patterns of the world oil industry. And again, the products that are produced here are products that we consume in our daily lives in very major ways. So I'm going to end with one final slide, which is what does this mean? As I said, the last chapter of the book spends a lot of time talking about kind of the contemporary climate emergency. And the basic argument that I try to make in this chapter is that when we think about oil through this lens of the wider kind of nature of capitalism, the problem becomes much bigger than simply the oil companies. Very often we think about oil companies being the primary enemy, the primary actor in the climate crisis. And it's certainly true, they are a major obstacle, but actually it's the social system we live under which gives power to these firms, which needs to be, I think, prioritized in terms of effective climate strategy. And what I try to show in this final chapter is that if we look at the range of so-called low carbon solutions that are being heavily promoted by oil companies and also by governments, things such as electric vehicles, the hydrogen industry, biofuels, biomass, as well as carbon capture and storage. These kinds of so-called solutions, I think, very clearly, it's quite straightforward to illustrate that they're false solutions. They actually don't tackle the major problem. And in fact, these solutions are all being very heavily promoted by the oil industry itself, because it provides not only another venue of profit making for these big firms, but it also enables them to continue business as usual under the guise of taking action, which actually they're not. So I talk about each of these kinds of so-called low carbon solutions as part of this. And again, just to come back, bring it back to the question of the Gulf, it's very clear that the Middle East, the Gulf firms are playing a major role in each of these things, in particular, the question of hydrogen and carbon capture. And they are also associated very closely with international policy making, most notably through the COP summits, COP28 being held in Dubai under the presidency of Sultan Al Jaber, the head of the Abu Dhabi National Oil Company, but also in the most recent COP in Baku, the Gulf states played a major role in that as well. So I think this convergence of this East-East axis with the way that climate policy is being made is really important to kind of bring out in how we think about effectively addressing the contemporary emergency. So I'll stop there, and thanks very much to Lale and the Center for Gulf Studies for letting me present my book. Thank you.
Thank you so much, Adam. This is absolutely brilliant. And of course, the book is wonderful. And I recommend it for anybody who wants to understand and wants an alternative to Daniel Yergin's very problematic tome. It's also much more concise and readable than Yergin. Okay, so before I turn off the recording, I'm going to ask you a few questions myself, and I'm going to take the privilege of the chair. And a couple of them have to do with your presentation, but one of them has to do with a subject that you haven't talked about, but which I'm hoping to pick your brain on. So let me put the questions to you. The first one is, why is it that so many of the East Asian countries moving, especially those that have the kinds of manufacturing processes that are pretty extensive and well established, Korea, Japan, etc. Why are they moving into plastics? Why are they moving into petrochemicals? So it's from some of the other areas of manufacturing they're in. What is it about petrochemicals that makes it an attractive sort of thing for East Asian countries? The second question that I've got is it's completely understandable that the national oil companies are moving towards vertical integration and towards petrochemicals. Obviously, petrochemicals are value added. They're, what you can sell them for, what the profit you can make off of them is a lot more than it's a lot more than it would be if they were just simply producing crude. Why is it then that the majors are not doing the same? They are not vertically integrating in the same way. You see Chevron, for example, and Exxon trying to sort of, all of this sort of the struggle that's going on over the oil in the Caribbean and Guyana and elsewhere. But really, they are not trying to go back into crude. So why is that? And the third question is, which you haven't spoken about, but I'm really curious about, is dollar denomination. I mean, we know that, I mean, if we look at sort of the British Empire and the sterling denomination, the sterling being the sort of really the currency of the world until dollar became the thing, was very much tied to, if you want, the sort of the British capitalism that was based on supremacy of coal. So the emergence of an American empire was very much tied, which goes hand in hand with dollar denomination, goes hand in hand with the supremacy of oil and the U.S. domination in that instance. The statistics that I love always to give is that in 1959, something like 70% of the world, 60-something% of the world's oil was owned by American oil companies. So it really is that. Do you see a move out of dollar denomination, especially given sort of the BRICS bridge, because of the shift to the sources of potential shift to the sources of energy? So if we have a new century beginning with China, especially moving into EV and like quickly dominating actually alternative or sustainable forms of energy through their focus on battery technologies, does that foretell a shift in dollar denomination, or do you think there's something else that goes on there?
Great. Thanks, Lally. I mean, these are very big questions and really important questions. I mean, firstly, on the issue of why petrochemicals and why plastics, I think the simple answer to this is that basically everything that these countries produce is largely dependent upon these petrochemical products, whether it be plastics, whether it be other kinds of synthetic materials. So even like high-end, more high-end advanced materials, for example, electric vehicles, a very large proportion, I forget the figure, but I think it's something like more than 30% of an electric vehicle is actually plastic. So so we need to, I think, move away from thinking about these high-end or more advanced technological products as simply thinking about the ways that petrochemicals are embedded within them. The same with wind turbines, the same with solar panels. These are products of petrochemicals. So that's, I think, one reason for it. And it's interesting, I think, to think about the earlier development of the so-called East Asian dragons, South Korea, Taiwan, Singapore, which interestingly were also based initially around petrochemicals in the 70s and 80s. So it's I think interesting to see the longer kind of durée of this this move. Again, this is not to say that there isn't an important chemical industry in Western Europe and in North America. There obviously is, and by some of the biggest companies in the world are headquartered in those places. However, particularly with some of the new technologies that I've mentioned, the cost of production now is much cheaper in the Gulf than it is even in East Asia. So South Korea, for example, is having actually its industry is going through a big crisis at the moment because the cost of chemical production in the Gulf is significantly cheaper now with some of these new technologies that are emerging in Saudi Arabia. On the super major yeah, I do think that companies like ExxonMobil, and this is partly related to that second question you asked, companies like ExxonMobil uh, uh, are heavily involved in petrochemical production and obviously refining as well, more generally. But it's I think clear the crude base, the kind of upstream interests of these Western firms have moved either into shale or into kind of deep sea or ultra deep sea kind of drilling, which is more expensive, also more damaging and dangerous than conventional onshore oil reserves, which tend to be concentrated again in the Gulf. So there is this kind of, they are still producing crude oil and they're still exploring for crude oil. You mentioned Guyana, for example, and other places, but they do tend to depend upon more these more expensive and offshore reserves. And then finally, yeah, the question of dollar denomination is hugely important and I think really interesting. And I spend quite a lot of time in the book talking about this emergence of the link between the US dollar and oil, the denomination of oil in the US dollar, because it's not widely known that up until the 1970s, about 30% of world oil was actually sold in sterling, in British sterling. There's a really great book by Stephen Galperin which discusses this history and kind of makes the argument, I think very convincingly, that actually one of the primary driving forces of British colonialism in the Middle East was to maintain this link between oil and sterling and the recirculation of oil wealth into London and the sterling zone in this moment of kind of imperial decline post World War II. So after basically the mid 1970s, oil becomes fully denominated in in the US dollar. This is closely associated with the rise of or the alliance between United States and Saudi Arabia around this time in the 70s. Now today, it is a huge question about whether we'll see a shift away from that dollar-denominated oil, and it's clear that both China has said that they hope to see this happen, and and Saudi Arabia has said it's open to the idea of selling more of its oil in Chinese yuan instead of US dollars. However, I think we need to be a bit cautious in kind of predicting the rapid end of dollar supremacy. The reason, I think, one of the big reasons for this is that the Gulf's surplus capital, the Gulf's reserves are still largely dollar denominated, and a big portion of them are still located in US financial markets. So the Gulf, and Saudi Arabia in particular, does have an interest in the US dollar being this kind of world money, if you like, and so it kind of, I think, mitigates against any rapid shift away from dollar-denominated oil. But yeah,
Thank
I'll
you.
leave it there.
I love the Galpern book, and it's kind of amazing to me that it has never come out in paperback, because it is probably one of the best books.
No, it is in paperback. I have a copy, actually. Yeah.
Is it in paperback?
Yes.
Really? I
Yes.
paid so much to have that in hardback. Okay, I'm going to stop recording now and open the floor to questions.